All right, we're back. Calls of the day. We start with a stock that Weiss just mentioned a few moments ago, one that he absolutely loves, unless he tries to refute that too. Leidos, because that's just the way you are, Weiss. Leidos upgraded to buy from hold, the target to 205 from 185 at Jefferies. Why don't you tell us why you love this so much, Steve?
Well, you know, I've gotten to know Tom Bell, the CEO, pretty well, and went in there before I bought the stock to talk about it. And their new management, essentially over the last couple of years, and they came out with a plan, and they've executed perfectly in line with the guidance they laid out and their methods of operation when they took over. And that's come to fruition. And put this in perspective, you know, the DoD came to 10 companies, Booz Allen being one, the large government contractors, Lockheed. And what they said was, you got to give us back something on the contracts. And Leidos is part of that. And so Leidos, 30% of their headcount is embedded in the government. So they're able to navigate through that. So the business continues to grow. They continue to beat and raise. The stock's not expensive. Jefferies came out with a target of 205 and upgraded at this level. I think there's a lot of upside here. So it's a bet on management. It's a bet on what they're doing in cyber and everything else that is the soft part, I'd say, of the defense market, not being soft as you touch, but not metal benders. So high margin, I like it quite a bit. And would consider to add, pull back.
Okay, thank you. Eaton, target hike to 425 from 375, overweight, Morgan Stanley. We think the margin headwinds will prove transitory. Valuation already discounted versus its peers. Joe, you own it. What do you think?
You know, in the A block, we were talking about the fundamental tailwinds for the market. And one thing I think we left out has been earnings. Earnings continuing to deliver overall for the S&P, and in particular in the industrial sector. Eaton, classic example of really high expectations. Stock was performing remarkably well going into earnings. Earnings were reported, stock falls. There's your bad price action. You take the other side of that, in particular where it is right now, technically at the 50-day moving average. But you turn back and you say, what do these earnings look like? They are participating in the infrastructure, the data center build out. Data center orders up 55%, revenue up 50% accordingly. This is not something that you move away from just because it looks like everyone's appetite is full and they don't want to eat dinner. They're going to come back tomorrow. They're going to eat breakfast, lunch, and dinner again.
Okay. Caterpillar, Weiss, target goes to 507 at Truist. Target goes to 495 at Bank of America. You talked about this stock as well.
Yeah, look, I bought this for exposure where I didn't have it at the time I bought it. It was let's say, less expensive than it is now. I viewed, quite frankly, as fairly valued. The quarter was good, but I'm not very excited about it, even though it's a core position. I'm going to ride with it because, again, it's counterweight to what I have elsewhere. And let's face it, with increased onshoring, they should participate. The risk is, of course, if Ukraine and Russia settle their differences, then you could see more commodities come onto the market outside the U.S. and also lowering commodity prices. So that may soften demand, but I don't see that happening anytime soon.
All right, Liz Thomas.
Just call me Liz.
Industrials. Industrials. Weiss is so distracting that it distracts me when I come off from him to you, and therefore it happens.
I'm a magnet.
Yeah, but nothing good. Bad things stick to you, Weiss. Industrials are the second best sector year to date. Do you like them?
Are. I mean, look, it's always hard to like something when they're doing so well. You worry about when it's going to turn, but I do still like them. And there's a lot of economic activity that, again, has been warning us that something's going wrong. But industrials, especially the capital goods sector of industrials, has been doing really well. And I think you still can own them here. The same rules apply to when you're looking at mega cap tech. You see companies that have gone up a ton. They're at all-time highs. They're way above the technical levels that they should be. Just be careful of your entry points.
I'm just going to call you Liz.
That's
I'm not even going to make it complicated on myself. Why would I do that to myself repeatedly? Whatever. Axon.
Yes, sir.
Axon. We talked about this yesterday.
Sure did.
This has been caught up in meme mania, in cultish stock activity.
Let's raise that a little bit. Yeah,
so
it's called, well, the law enforcement industry is certainly behind this stock with good reason.
Is this the former taser?
Yes, they have the technology that's in place right now that's servicing that industry.
Okay, the target goes to a street high $1,000 at Bank of America. Are you refuting the fact that it has been caught up in that mania a little bit?
I think it's
a retail happy name.
Look, it's a mid-cap stock. I think it's very similar to what you're seeing in AppLovin and Palantir. I don't think it's like seeing what you're seeing in some of the other stocks. I mean, it is delivering the revenue growth. Here's how you look at the stock.
What do you mean in some of the other stocks? You said yesterday that you could take Palantir out. You could take Palantir out of it. You included AppLovin with this and something else yesterday as in Palantir. The cultish thing. No.
The momentum cult, Scott. The momentum cult. I think we're having a difference of the way we're looking at it. You're telling me these are meme stocks. I don't look at this as a meme stock. Think of a meme stock, and I don't want to offend anyone.
I said a cult stock, cultish stock.
I think it's momentum cult for sure. Absolutely. It's the cult of momentum.
There are different grades of cult stocks?
Well, listen, there's some real earnings behind these companies. So I don't want to disregard that. I think some of the meme
there are real
stocks,
earnings behind Palantir, too.
And that it can be included in the classification that I'm describing. I think some of the meme stocks, I don't think they're delivering the earnings that some of these companies are. There is
which stocks would you characterize as meme stocks?
I'm not going to offend people out there. You know the stocks out there that have been rallying.
But now I don't. I thought I did. Now I don't.
I'm not going there. Let's talk about Axon for a second. All right, it is a clear momentum-driven stock. Yes, supported by some revenue growth and good revenue growth and earnings. But in addition to that, the way you look at the stock right now, first of all, analyst community, 88% buy rating on the stock, average price target, $884. Price target's going to go higher. Yesterday's low at $800. If you are risk managing the stock, if it goes below $800, maybe you want to reduce your position if you have discretion and the ability to do it, because it should not go back below $800.
Is American Eagle a meme stock?
No comment.
I'm gonna back you up for 1 second and potentially even bail you out.
Please do that for the next 20 seconds.
And say, if you look at the 5-year chart on Axon, it has been a momentum stock for 5 years, right? Mm-hmm. Earnings growth has been pretty solid since they made the shift from being a hardware company selling tasers and body cameras to realizing that they are a software company and they can sell subscriptions to people. And that was what really expanded the growth in that company. So for that one in particular, the rest of the names you mentioned, I got no bailout for you. But for Axon specifically, I think that's where the real shift happened for them.
All right. He appreciates you very much. Christine?